Hello, good afternoon, everyone. Good afternoon. Hector Giraldo here with American Homes Funding in Orlando, Florida, to cover a subject that's been talked real loudly this week, in the past few weeks on the internet. Here we are at Stanley Martin, one of the top builders in the Orlando area. Not promoting anything, but just wanted to make a video that was give you some type of excitement about the communities in our area. This is in the new Lake Nona area, kind of here in Orlando. You can see the amenities. They're beautiful pool, beautiful clubhouse. So we're gonna discuss about affordability. So that's what we're gonna talk about, affordability. And again, we are American Homes Funding. We are in downtown Orlando. We are a lender, broker, here for you at your service. And we're going to talk about the 50-year mortgage, which has been discussed a lot this week online and everywhere. There is even people saying that there is already a 50-year mortgage, which it is not true. So I'm just gonna come here and discuss a little bit about what's being offered, so that way maybe you get excited about acquiring one of these properties right here. Not only in this community, there's many communities that are being built in this area. And if they get affordable, you will be able to acquire one of these property, but you have to be responsible. And that's what I'm going to discuss with you, with the new 50-year mortgage that's being floated around by the U.S. government, and especially on Mr. Polity. So let's talk about it. So 50-year mortgage, pros and cons. So I'm going to talk, actually, let me go back. I'm going to cover two subjects. One, the 50-year mortgage, and I'm going to cover the actual less than 620 or no credit score required for conventional loans. And we're going to try to shed a little bit of light on you about what this means and how you can take advantage, combining, if government passes, hopefully, the proposal on the 50-year mortgage. So let's begin by 50-year mortgage. What does that mean? Pros and cons. So 50-year, as it says right there, it's going to be a change that's going to happen where instead of taking a 30-year mortgage, you will be able to take on a 50-year mortgage. The objective is to help those in need of buying their property to raise their family, especially new families, new young generations, millennials, help them get into the home of their dream without having to break their bank or basically lose their mind on how to make money to pay for a mortgage. All right, it sounds pretty cool, and I think it's pretty cool. It's just that there's a downside of it, and it all depends on who gets it. So 50-year, it is nice, you buy your property. Now nobody can tell you leave. Nobody can kick you out of your own home. So it gives you certainty that you're raising your family in a nice community like this, and no one can do anything to you because it's owned by you. Now, that's the beauty of it. And then allows you to pay, instead of paying, let's say, 100% of what you would pay right now on a 30-year mortgage, you would be paying around 60% of that, because it is a 50-year mortgage. So out of every $1,000, this is just an example, right? You will be, instead of paying the $1,000 right now, you would be paying $600. So a $3,000 mortgage becomes right away a basically around $1,800 mortgage, which it is awesome. So that's the beauty of the 50-year mortgage. Now, it comes with a few price tag, few things that you should know. One thing is you're never getting something, some benefits without giving something back. So let's go back a little bit right here. So I'm just doing this to walk you in real life on a community that's been built that might entice you to feel like, oh man, I want to get into that 50-year mortgage because I want one of those homes. So Yes, you pay now less, but you are getting into something that if you are not careful, you are going to be in trouble for the rest of your life. So what you need to pay attention to, first of all, the 50-year mortgage, if it's approved, again, it's not even approved yet. It's not even in the hands of FHFA yet. So they're just talking about it. But if it ever becomes approved, right, what happens is you are going to get a few things which are the downside of it. One, you are going to get a higher interest rate. So know that, because you're never going to be given something for free. Second, you are going to get upfront higher cost. So that's something you should know too. So those are the two bigger downside of it. And the biggest of all is that if you're not careful, you're going to get into a debt that's going to take you on to your retirement years without being able to pay it off. So you might be leaving your family a financial trouble, kind of. So basically, how can you get away with taking the 50-year mortgage if it ever becomes approved and still win over the system? Simple. You use the method that's being used right now by people who hold 30-year mortgages. So you just do accelerated payments, that's all. So instead of you taking the 50-year, you do 500, 600. Anytime you have a surplus in a month, you just dump it into that mortgage. You might end up paying your mortgage not only in 50 years, but in 20 years. So that's what it is. It's about you taking advantage of the opportunity that's going to come to you and then using it to your advantage, but being smart. So that's what's all about. Remember, this is not even approved yet. This is just being floated around, but it's not even in the hands of Congress or Senate. No, it is still just something that's been floated around by Mr. Pulte. And now, this combined with another clause, which it is going to be something that's already in place, which it is no credit score, no minimum credit score required for conventional loans. That's a big thing, because now you have the opportunity to get into a mortgage where they will not require you, okay, to have a 620 credit score to get into a conventional mortgage. Now, that combined with a 50-year mortgage, it might be a huge plus for first-time home buyers because it allows you to get into your new property. And that's what it's all about, to get into a property that you dreamed of and now you can't afford. So it's all about affordability, about the opportunity for you to buy your property. And basically, from there on, if you're smart enough and if you are responsible enough, be able to handle that 50-year, lower it to maybe 20, 25 years, or maybe 30 years, and you still win over the system. And now you own your property, you raise your family in the community that you dreamt of for them. So less than 620, okay. So what does that mean? What that means is you now can apply. But there's the thing. Credit is still required. So because what's going to happen is if you are somebody who has ruined your credit, you don't pay attention to it, and you have a 525 credit score, they will just jump into your credit, see what you've been doing. You have a bunch of collections, you have a bunch of write-off. You're not going to get approved. So I mean, that's what you need to keep in mind. It's not about a free ride. It's about those people who, for some reason, they don't have a 600 credit score. They don't have a 590 credit score. They still might be fine if they did everything right, or if it is a situation where they were not friends of using credit. Therefore, now they want to buy their home and they cannot buy it. But because they never use credit, they will be fine as long as, and this is where the downside of that comes, as long as they have a large down payment, okay, and as long as they have another compensating factors like employment history and low DTI ratios and reserves for closing, meaning that after closing, if they do have money left in the bank, they are a big, huge prospect for the automated underwriting system, and the automated underwriting system simply will go yes. This is a good prospect because they don't have a 620 score, but they have been good about their managing their finances. They just don't like credit, and that's okay with us. Plus, they have a good employment history and they have good income. Therefore, their DTI is low, or their debt to income is low. So this is one of the homes that you can acquire. So you can see right here, if it becomes more affordable for you and for anyone that you think actually more affordable for you. That's it. Simple as that. You could buy a home like this as long as you meet those requirements. So basically that's all I have for you. So 50-year mortgage and less than 620 credit score. Yes, those things are available, but you already know, and now you know what you need to know, so that way you make smart decisions. So looking forward to hearing from you. We're in downtown Orlando, Florida. American Homes Funding, 407-214-4110. And basically our NMLS number is 1721096. Looking forward to hearing from you. Bye-bye.